Oh, Johnny boy, are we still on the yuan? Really? Oh, it must be Friday. Oh, what time is it? 7:31? Cool. Guess we got to get going. You what? That's good. Yeah, we did a discussion about the money supply as well, didn't we? That was pretty cool. All right, good morning, moderator. I guess probably even good evening for you, huh? Yeah, good. Hey, moderator, do you happen to trade Forex? We should probably do that. We should get all the moderators together. Talk about the currencies in their countries. We should do like a moderator team meeting someday. Everybody's hiding out. No, no. That'd be very interesting. I'd love to know what's going on in your economy and what things are affecting. So, for example, and we'll get going here in a second, but one of the things that will probably happen because of China revaluing their currency is all other Asian currencies that are part of exporting nations, which are most, will need to devalue their currency as well. Oh man, I forgot I can't load a JPEG. So it'd be interesting to see how it affects various economies in the region. And specifically the average person on the street, right? Could this happen next week in Japan? Well, I mean, sort of. I mean, it's already basically happening, right? So there's two reasons why China needs to do this. One, let's go to this chart here, USD yen. Okay, so let's talk about this briefly here. China is considered a currency manipulator. We all know that. Congress shakes their finger at China. China, very, very bad. China, very bad. You manipulate your currency, very bad. That's Congress, right? But let's take a look at what's going on here. This is the USD versus the Japanese yen. Okay, clearly the Japanese yen has depreciated in the last 3 years. It used to be worth 75. Now it's worth 125. Very, very weak. Now, is the Japanese yen weaker over the last 3 years significantly through sort of natural forces, through basic global macroeconomics and supply and demand, or was it manipulated? It was manipulated. We don't have a problem with that, right? In fact, if your government has a central bank, the central bank is put in place specifically to manipulate the currency. That's what it does. Through things like interest rate, making credit available and pricing that credit for you, but also by changing the value of the currency through money supply. So they make money and they make credit, or they price the credit so it's either available or not available. But that's their job, right? The central bank manipulates. That's That's why we have them. We need it. So it's always very peculiar that we shake our finger at China. You're so bad. Well, look at what Japan has done over the last 3 years. They dramatically weakened their currency through quantitative easing. They actually, increased the money supply and devalued the currency. That's what they did. It's a fact. We all know it. But Japan's okay, right? All right, so that's that. We know the Japanese yen's been manipulated. Who is Japan's largest competitor for exporting goods to the rest of the world? Who's Japan's biggest competitor? China. So for the last 3 years, Japan has significantly gained advantage over China. How do you think China feels about this? That China is the bad one. You're so very bad, China. You manipulate your currency. And then they watch Japan do this, and everybody's fine with it. Good job, Abe. I mean, it's really not fair, right? So, how does China value their currency? How does the People's Bank of China set the value of their currency? That's right, Igor. They peg to the dollar. So you could look at this chart here and say it's the CNY versus the JPY. Not exactly, because over the last few years, China has allowed their currency to float 2% up or down relative to the USD. But generally speaking, if the dollar goes up in value, so will the yuan, because they are tied together. So let's just pretend this is the CNY versus Japanese yen. This makes things very difficult for China, because now Chinese products are going to be priced in very similar fashion as Japanese products. And that's not cool if you're competing, right? So China is actually stuck in a very difficult spot. It's pegged to the dollar. My personal analysis, my personal outlook for the USD is that the USD will continue to gain value for probably 3 or 4 or 5 years. China's probably thinking the same thing. So just that's a problem then, right? And when might Grandma Yellen raise interest rates in the United States? Well, no, I said might. I would say for sure by then, but it could be sooner. In fact, 55% of the market says it's going to be sooner than December. When? September. Huh. So in approximately 4 weeks, because it's really the middle of September, right? So do you think it's a coincidence? Because if the dollar starts to get ripper strong in September 17th, then the yuan gets ripper strong, and will probably stay on that track for years to come. As long as the Fed is thinking about raising interest rates at the next meeting, meaning they raise interest rates to 0.5%, then to 0.75%, then 1%, then 1.5%, then to 2, to 2.5, to 3, to 3.5, to 4, to 4.5, to 5, to 5.5. Right? I mean, it could take years to go through that cycle. And then the day they say, look, we're done, there's no way in hell we're going to raise interest rates again, that's the moment I become a bear on the US dollar. and I'll probably be a bear for many years to come at that point. And we'll have to leave that for a discussion on current account deficits and all that kind of stuff. That's a whole different thingamabob, right? But anyway, so we're looking at the Fed starting a new cycle or a new policy of raising interest rates and normalizing interest rates. So anyways, that would in of itself create a very strong CNY. And so I think China is in this position where they say, we got to get off the peg. No, Igor. No. The Fed has painted themselves in the corner. They're going to do it. Think about a central bank right now. One of the new theories in central banking. Let me change the chart to so you have eye candy. One of the new theories in central banking policy is transparency. Okay? And they've been working on this for years and years and years. And all central banks are going through this process except the scumbags at the Swiss National Bank. Everybody else is working on the modern central banking theory, okay? And that is transparency. So we have things like press conferences now. We're even releasing meeting minutes, like, right? Was it the Bank of England that did that just the other day? They made their announcement and released the meeting minutes. They didn't even wait 2 weeks. It used to be 2 months. So anyways, we're getting into this area of transparency. And if Janet Yellen says by the end of the year, it has to happen by the end of the year. If they balk and they're like, well, we changed our mind, a butterfly flapped its wings in Indonesia, so we're going to have to not raise interest rates. Well, then that'll just screw up the whole market because, no joke, maybe $1 trillion has been, organized around the idea that interest rates are going up. Whether it's an opportunity to make money or that's a threat to certain investments so that you got to hedge. But that's what central banking policy is supposed to do. Tell the world what's going to happen and give them time to adjust their portfolios appropriately. So to screw that over, $1 trillion, maybe $10 trillion. I mean, it's significant, guys. There's just no way that can happen. They have to do it now. Or you get sort of a Swiss National Bank situation where you're like, oh my God, you told me one thing and did the other, and I'm screwed now. Okay? So anyways, so China sees the interest rates going up. If not September, then December. It doesn't really matter, but they got to do something. So they're devaluing their currency as the beginning to break the peg. So do you know how they said that they're not going to devalue their currency anymore, right? They said that, when was it, yesterday? That they're done? Who believes that? Oh, boy. I mean, look at how far they have to go. To put this in perspective, we're looking at weekly charts. This is what's happened because of the Chinese devaluation. Holy smokes, eh? That's a week. That's this week. Oh my God, China devalued their currency by 6%. Oh no. The world's freaking out, right? Imagine if you lost money this week. You'd have to look at that and say, wow, maybe I'm overly sensitive to market moves, right? Maybe my stop's too close. Because that kind of looks like nothing happened, right? Okay. So anyways, that puts it in perspective. I hope that there could be, a long ways down if they wanted to. Okay. So, when stuff like this happens, though, it brings uncertainty to the market. Uncertainty creates risk. So we're in a risk-off deleveraging mode right now. That's cool. It doesn't bother me. Do you know why? Every year, this time of year, we get kind of this thing going on. Pop and stop up, pop and stop down. But if you look at it, what's happened over the last, what's happened this summer? There's this summer. I mean, is that really a big deal in the scope of things? Right? Like we're like, wow, man, here's July and August. Woo-wee. Right? So no big deal. Try not to get caught in the middle of the storm. If you're going to trade, I've been telling people to shoot at rabbits. Don't worry about only picking up 30 pips here, 25 pips there. Don't worry about it. But the big money is going to return to the market pretty soon, and they're going to prepare for the interest rate hike at the Fed. That's really what we should be focused on. Okay? Every year, I say the third week of August, you should be back at your desk. If you're still on vacation, the third week of August, you're not a currency trader. You're a tourist. You're a currency trading tourist. Right, Billy. I just like watching those currency traders. Makes me so excited. Yeah, well, some people have to actually do it, right? So anyways, so we'll see. This is a slow period of time because all the socialist pig dog Europeans are on their forced vacations. Right? It's a holiday this year, right? Or right now, isn't it? Isn't it Monday and today and Monday are holidays in much of Europe? Is that right? Many of the banks are closed today and on Monday. Yep. So I was telling my children, I'm like, yeah, Europe's different. Everybody with money takes the whole month of August off. I've been to Zurich in August. There's nobody there. It's a ghost town. No joke. Absolutely empty. Entire buildings have lights off. Then I said, well, not everybody's rich in places like Switzerland. There are a few people that are actually not rich. And so they're forced to take holidays. Today and Monday, they're forced to take a long weekend. There you go. Right? So even the poor people get vacations. Everybody stops working in August. So very interesting. So the money is going to start trickling back. The third week is the same thing I say every year. The third week of August, I'm back at my desk, and my intent is to build a position up by non-farm payroll September. And last year, I think I had something like 30 positions in the yen pairs. What happened to the yen in the first week of September? What happened to the yen pairs? Well, the yen went down, the yen pairs went up. Yeah. But only by 1,000 pips each. So cool. So that's the plan. There, I just gave you inside information, yo. Same scenario this year. Well, that's a big question mark, right? So before I get off this yen, let's go back to that. This is pretty elevated, don't you think? And we're not far off of some tops back in 2006. We're right back to where we were. But let's also put that into perspective. That's where we were in 2006. a while ago, I don't know when it was, 15 years ago, the USD yen was at 200. 25 years ago, it was at 300. So if China starts devaluing their currency, what should Japan do? Should they stop quantitative easing or keep that program going? Yeah, they don't want to lose ground. They've spent trillions of yen to get where they are now. Now China kicks in, starts devaluing their currency. You can almost think of this as this currency pair going down again if you substitute the USD for the CNY. So they would, is Japan close to reaching their 2% target? No, not even close. So they've spent all this money. Now what? Well, there's two things that'll happen in Japan. One, everybody gets fired. Everybody in the entire government's on this. The Bank of Japan, the upper and lower houses of parliament, prime minister, everybody is involved. You'd have to fire everybody. And you know what? That can happen in situations like this. You spend a couple of $1 trillion, right? $1 trillion here and $1 trillion there, and you have nothing to show for it. Everybody gets fired. Or you double down, right? Or double up. In that case, what you do is you double quantitative easing. Well, not killing, but competing, right? So at this point, China is pegged to the dollar, and they're playing the game and all that kind of stuff. And one of the things, or probably the major thing that's hurt China, is that the Europeans are so unbelievably slow. It took Draghi just an unbelievable amount of time to do anything at all. And that hurts China because, Europe is choking on its own blood. It's certainly not buying, junk from Chinese factories. Yeah, a lot of people are talking about the currency wars and stuff. Who cares? Just make money trading Forex. Who cares? So your neighbor gets poor. So what? He could have been trading Forex. Right? If you're so concerned, make a ton of money and give it to your neighbor. Right? I volunteer all the time for nonprofit charities. That's what I do. I was at a food bank just, what was it, last week? Yep, big high-powered man. I actually swept the floors. Not bad for a master of the universe. And I took my son with me. All right. So anyways, there's a way to give back, but make money. Right? Make money, take care of your family. All right. So that's the greatest hedge is cash. We were talking about that yesterday, actually, when the economy had tanked and all the banks were closed, they wouldn't lend money to anybody, no matter how good your credit was. Cash was king, and the world was free. Fantastic time. That's why it's good to be rich. If you had to choose rich. All right. So, okay. So people want to get on the euro. Good. So we got that stuff out of the way. Let's do some trading. So what do you want to do? What you want to do? I've got a pocket full of pips and my homeboys do too. So are you a bull or a bear? Okay. Non-farm payrolls. Remember that? We had a short somewhere in here, and I said at 9:13, look for a flip. Probably go back to where we started, is what I said. How many people were there? Yeah. Now, okay, two things. One, I was right. 9:13 was pretty gosh darn close. Two, it did go back to where we start. But three, did I know it was going to make 130% reversal? No. I'd be an idiot to claim that I knew that. So anyways, that was that. We were there together. By the way, honestly, thank you for your loyalty. Let me say this right away. I've been doing this at FX Street for 10 years now. I really appreciate your loyalty, and some of you guys have been working with me for many, many years, and I really appreciate it. I was logging in today to get ready for the webinar, and I noticed I thought there was something like 500 people registered for this webinar. I'm like, that's really cool. Because this is sort of a newer webinar, right? I've only been doing it a couple of months. And then I noticed that there's another one being promoted, the next one, right? The next webinar on Monday. So I'm like, oh, how many people does he have? So I clicked on it, and it has 60 people registered. 60. And there's 500 people here today, just pre-registered, more probably registered at the, coming in. So, you know what? It's really a great honor and a real pleasure. And I thank you for your loyalty. I work really hard and try to give you as much as I possibly can in our time together. I'm hoping it's help. I hope it helps. That's all. Just really appreciate it. You make me want to be a better man. So that was non-farm payrolls. We were trading that together. Okay. Made a higher high. Price action now. You take the previous resistance, it should become support in the future. Okay. Retraces. Probably Monday. All right. Boom. New higher high. Take the old resistance, drag it across, should be support in the future. Price comes down, you buy that one. It goes up. Old resistance should become support in the future. Price comes down, you buy that. Off we go. Didn't even really pull back. There's a little micro pullbacks, but this is an hourly chart. Price goes all the way up, makes an unbelievable higher high. Take old resistance, drag it across, should become support in the future. Price comes down. And now what? Well, I'm not sure. Because that was overly extended, and that was a big pullback. And then we get this like 1, 2, 3 kind of thing. Like there's nothing bearish, but I don't know. I wish it was as clear as these other ones. Double top would be good and all that kind of stuff. I'm just going to leave it for next week. But, if you're up there, be careful, right? Because you see how these other ones are like straight up, straight down, straight up, straight down, straight up. And this one's like, whoa, way down here, and then halfway up, and then halfway down, and then a little up, and then, it kind of feels like a rollover, but I'm not going to tell you that, so not so easy. But we got some nice price action in there, right? Gabriel's asked me if I'm a bull in euro. Absolutely not. Okay. Okay. Doesn't mean I can't buy it. I'm flexible enough to think short-term long, but long-term short. Okay. So I'm hoping this thing goes up and up and up and up. And then the third week of August, which actually is next week, I start building positions short. And we drive this from, I don't know, I don't care. Let's let it go all the way to 115 for all I care. And then we start shorting it, and we're going down to 80. Would you? Yes, I can. Now, remember, I say I tell people develop your bias and trade in the direction of that bias. Okay. Now I can do things because I've been doing this for forever. I can be long term. I can be short term long, but long term short. Many traders can't. So I'd rather you, if you're newer at trading, I'd rather you say, look, if you're a bear, wait for a downtrend and then sell rallies. Well, is it a surprise? Well, let's talk about that. When the market thins and the vast majority of the market participants go away, the obvious trend seems to fizzle out. I don't think that's unusual. And also, in many, 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 many ways, nothing's actually happened. So like you're looking at it on a 15-minute chart and you're like, oh my God, it's going up. But a professional trader using like a daily chart might not see it that way. He might be seeing nothing but consolidation. So look what's happened on the Aussie dollar, for example. Okay. This is all summer. How would you describe that? Nothing happened. Nothing. That's a major currency pair. Hey, but some people will tell me they lost 1,000,000 pips in there. Like, really? Because a pro might look at that and say, well, gee, nothing happened. We're just simply waiting for the daily to roll over. Right? What would you do if it rallied all the way up here? Some people will say, oh man, it's been counter trending all this time. No, it hasn't. It hasn't. Because like we just did on an hourly chart, the only thing that would happen is this. You see? So just put it in a proper context. Right? You might be suffering, but an institutional investor might be snoring. Okay? So let's put this into perspective. Are you long and making money on this? This is actually yesterday. Some of my team members shorted this down into here. And I said back in here, guess what? At 10:34 a.m. New York time yesterday, I said, look for it, a change of direction. And because the hourly chart was also rolling over, that this would probably head back up to 74.00. Look what happened. Did I? Sorry. Yeah, it's just like one of those weird lucky things. By the way, Lawrence, you killed that euro yesterday, huh? Awesome. Killed it on that thing. Went long and the sucker went up 50 or 60 pips. Good job, man. Yeah, it's only money, right? You're like, yeah, just do my job. It's only money. Cool. So anyways, just put everything in perspective, right? Back out a little bit. Here's another classic trade, guys. Price makes a higher high. What's the secret word? hammock. Everybody get that one? I've been doing that at these webinars now for a couple of months. Everybody get it? I did some training maybe 2 months ago in this webinar at FX Street that I said, I'm going to drill you like a drill sergeant in the military. I said, imagine that you're in the Navy and alarms go off. And you're supposed to run to your battle stations. Drop whatever you're doing. You're in the bathroom, you're eating dinner, or you're asleep in bed, and day and night, the captain of the ship just flips the alarm, and everybody runs to their battle stations like they're being like they're under attack, right? Battle stations, burp, burp. And you're like, oh, and you just run and get to your battle station. And that's the training, right? Over and over and over again. And suddenly you'll get to a point, or not suddenly, eventually, you'll get to the point where you're fast asleep in your hammock in the middle of the night. And the alarm goes off. Burp, burp, burp. You jump out of your hammock, throw on your boots, and you're running down the hall at full speed, and you even know to duck your head to get through the metal door, because of course everything's metal in the battleships, right? You got to duck your head because there's watertight hatches and stuff. So you duck your head and you're going up the ladder, and you haven't even opened your eyes yet. Can you picture that? Your eyes are still closed because you've done this a million times, and you just know to go duck right at the last second. And you're still half asleep. Oh, man. Running to your battle station. So the alarm here is a higher high or a lower low. Hammock! That's our secret word. What an obscure secret word, right? Part of Pavlov, right? Train you. I ring a bell, you make pips. You're just so well trained. So anyways, the first thing you do is you let it make its high. Then you fib the whole sucker somewhere between the 382 and 618 Fibonacci retracement, which is here to here. You're looking to buy. And you're also in the red area paying attention to old support and resistance, which will probably be support and resistance in the future. And you should have long bombed this yesterday. That's it. Fairly easy. I know we've covered this type of thing, I mean, more than dozens of times, right? So that's what we talked about yesterday in real time, and I said it would happen at 10:34 a.m. Boop. You're welcome. All right, so that's that. But in the context of everything, nothing's actually happened. Yeah, Igor's, but we're a bear, yo. All right, then don't buy it. Wait for the double top. So what do you do now if you're a bear? Wait for the double top. So let's say we top it out. Where's the top? Top's going to be here. Great. Second part of this, lower low, lower high, drop it like it's hot. And you should be short about here. Okay. Now, I'm short-term long to long-term short. See, yesterday the dollar was weak. This had nothing to do with Aussie. Fly me to the moon. Has it already made a double top? That's for you to decide. That's your alpha. Right? Guess? Who guesses, Mike? Mike, when you pull the trigger, you should be shocked if you don't make money. Joseph, who knows? I mean, I can give you an answer, but couldn't be certain. So it's a top, Mike, if it does this, then that's defined as a top. And if there was already a top to the left, then that's a double top. There's no guess. Okay. Okay, pick a currency pair, any currency pair. What's on your mind? How can I help? Pig dog. All right, let's pig dog. Everyone pig something. All right, so we'll do pig dog. Boom, boom, ba boom, boom, ba boom, boom, ba boom. Boom, 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 ba boom, boom, ba boom. All right. What is this area here that I have drawn? You can see I did it yesterday. Tell me, what was I thinking? What was the plan? WWWD. What would Wayne do? Let's see. Higher high. What's the key word? Hammock. So I grab a Fibonacci study and I look for what? What's my entry zone? $382 to 618. So let's take a look. Okay. And the quick rule of thumb, the quick eyeball, is take previous resistance, and that might be the first area of support in the future, right? I mean, what is this, the fourth time we've done this today? Actually, I did all those micro ones, right? So this is probably the 10th version of it now for today. So you can see I actually marked it out because I'm doing my job. So we kind of have a first zone. The 382 to 618 is in here. So this is the 618. This is the 50%, right? And all of this is 382. Okay. You can get fooled by the 382, but remember, we got all of this marked up. So nonetheless, look at the oscillator, guys. That's a heads up, isn't it? But more than, yeah, I don't want it to go any lower than a 618 for show. Okay. But on paper, in the textbooks, this is what we have drawn. And I've shown you this is, like I said, this is probably the 10th example today. And I drew that yesterday. So yes, it went a little lower than I wanted, but it didn't kill the strategy at all. The strategy is the strategy is the strategy. My fib's messed up, Igor? No, there's more than one fib. Okay. By the way, there's resistance. I've already identified where to get out. Okay. And this is the plan from last week, was to have it come down here and buy it. Okay. Where's my mouse? Okay, so that's kind of what I'm looking at here. And I'm just wondering if we're going to get into a sort of a move like this eventually, right? But you can see we're short-term long, but long-term short. That's the context of what we're in, right? Could even go higher. We'll see. It's not up to me. Well, I've never actually been a bear on this pair. What I've been telling people is on days the dollar's weak, I buy the pound dollar. On days that the dollar is strong, I sell the euro dollar. I think the Bank of England's going to raise interest rates before many, many, many other major currency pairs or currencies. Okay? Does that make sense, guys? I think the Bank of England's going to raise interest rates before the Reserve Bank of Australia. Okay? So let me ask you, the pound dollar's made a 50% retracement. Does that mean the bearishness is over? No, not necessarily. Just not necessarily, right? Right. Oren points out, the obvious. They've already said they're going to raise interest rates. Yeah. I mean, everybody knows, right? So you guys should all have this in your fundamentals. Fed's going to raise, the Bank of England's going to raise. We know that. It should all be in your fundies. Well, Lewis, not before everybody else, just after the Fed. But why would Australia raise interest rates? Why would New Zealand raise interest rates? Right? Well, let's take a look at it. Those two economies are actually lowering interest rates. Well, what about Canada? They're also in a series of lowering interest rates. So it's just relative. You see what I mean? That's what we do, guys. It's just relative. The Bank of England is not cutting interest rates. That's bullish compared to economies that are cutting interest rates. China is slashing their RRR, lowering interest rates, and devaluing their currency. The ECB will continue quantitative easing till 2017. We already know this. So again, the Bank of England looks really good relative to everyone else that's choking on their own blood. Japan continuing quantitative easing, and by our own analysis today, by all means could certainly double the rate at which they're weakening their currency. Once again, that makes the British pound look quite safe indeed. Okay? Got to remember, things are relative. In Forex, you'll get caught all the time. Sometimes good news is bad, and sometimes bad news is good. It's all relative. You can't think just sort of top line number. You got to think it through. What does it mean, right? How is it going to impact things? Sometimes bad news means the Fed won't raise interest rates. And for some people, that's good news, so on and so forth. So you actually got to use that gray matter sometimes, right? All right, pick a currency pair, any currency pair. That was a simulator chart. Oh, is this another one? Yeah, another simulator chart. No Turkish lira, sorry. It says in the description for this webinar that we covered G8 and G10 only. Yeah, okay, a lot of people doing kitty cat. Okay, what you want to do, what you want to do. This is where you need to know if you're a bull or a bear yesterday or today or whatever. Here's a failed trade plan. See that? Failed. What do you want to do? Okay. A bull is prepared to buy this. It's a little risky, but they're looking at this gray zone, as you can see. I already have it dragged across. Okay, but that's sort of on a bigger time frame. If you look closer, what's happening? You see this gray zone? This is from yesterday, folks. It hadn't happened yet. We were down here when I drew it. Okay? And it seemed to me, and again, we were down here when I drew this gray zone up here. You draw the gray zone because that's where a bear would sell. If you don't sell there, you're not a bear, or you just don't know what to do. Okay? But it's plain as plain can be. If you're a bear, you are assuming it's not going to make a higher high. So therefore, it's going to make a lower high. Where would it make a lower high? On the roll reversal. Or use a 382-618, or use a pivot point, or use a psychological level, or use them all. But nonetheless, if you're a bear, this is your plan, and you're probably already on it. Okay? Why? Lower low. Hammock. Now, if you're a bull, you're taking on a bit of risk here, because look at what's happening, right? Lower low, lower high, lower low, lower high, lower low, lower high. Where are you going to buy it? You're going to assume like basically a higher low, higher high, higher low, higher high. Well, you better tiptoe into that one gently. Well, Emmanuel asks you about basically, when do you pull the trigger? If you've analyzed this on a 4-hour, you know this is resistance. Okay? Right? I mean, you know it. So when you get in there, drop to a smaller time frame, whether it's a 15-minute, doesn't matter, 5-minute, doesn't matter, and prepare to sell it. Even though it hasn't happened yet on the 4-hour, sell it on the 1-hour. How about, or sell it on a 15-minute. If you have a 15-minute oscillator that's 90% overbought and you're sort of in here, sell it. But your stop here. Right? You're short here, your stop's here. Take a shot. And what you're doing is you're front running the obvious on the 4-hour. Okay. Yeah, we're on the 42 line on oil, and that's my projected target for the oil short from 63, right? Remember, we were short at 618. The extreme target was 42. So let's go back to that. Let's bring it up here. So we're on the line. We're on the line. We're on the line, and it's sort of an Obama line. Like, if that doesn't work, backtrack. So yeah. Well, it comes down to this, like, if it goes any lower than this, I don't have a number that I believe in. So if you're focused on the fib, so we've been doing this. This is my plan. Last year I had this planned out that we would sell at 60. Okay, as you can see. If you're going to believe the fib, then it's saying 14. I don't think we're going to 14. I thought I did Euro USD. So anyways, I don't think we're going to 14. I really don't. So the next one up is 23. I don't think we're going to 23. So this isn't a technical play. Okay, you understand? This is true market forces. My opinion, and I would have given you this opinion last week, I would have given you this opinion last month, and I would have given you this opinion 6 months ago, that we're going to be caught somewhere between $45 and $65 a barrel, maybe even 70 at the top. But then if we get to 65, it'll be driven down to 45. And then you get to 45, and then it'll be driven slowly but surely, drift back up to 75, and then boom, straight back down to 45. That's kind of where I've been for a long time. So if we're breaching here, I just have to be completely honest with you. I don't know where it's going. Yeah, I mean, Andy's right. I mean, not many winners on this one. Okay. So I still think this could just be a blip on a Friday, and next Friday we're like up here. And we'll say, oh yeah, so we wicked down there. Not the end of the world, right? Yeah, I think, as Andy says, range time for a while. I mean, like 3 years kind of thing. So when I'm talking to clients, in particular in the Middle East, I explain to them logically why gold is not going to be a good investment, that gold is simply going to do nothing, and that oil is not going to be a good investment. It's also simply going to do nothing, which really sucks if you're wealthy and you're in the Middle East, because in many of the countries in the Middle East, you own physical gold, you own physical oil. You actually have the physical commodity. It's not some paper trade on a futures contract. You actually own the commodity. So that's that. And then, of course, 3 years ago, all your expert financiers told you to move to euro, right? Remember that? Put all your money into euro. Well, they're not loving that right now, are they? Yeah. So what does it all mean, Basil? I said, well, this is what it means. Give me all your money, and I'll keep you rich. 0.2. Shocker. Woo! 0.2% on the PPI. So that's my story and that's my opinion, and I'm going to stick to it. Sure, Andy. That's also, I'm actually hoping that Iran deal goes through and they lift the embargo, because a friend of mine, who might actually maybe be in the room right now, is a very significant player in Iran and has access to billions and billions and billions of dollars that can't get out of the country because of the embargo. Igor says a very dangerous deal if it goes through. Well, that's not for me to decide. But if it goes through and they release the embargo and allow that money to come out of Iran, somebody's going to get filthy stinking rich. Might as well be me. What? Look, I'm not the one signing the deal. What am I supposed to do? Vet things? Someone else has vetted it. I'm not a politician. I'm not the military. I'm not a nuclear physicist. It's not my job. Now, look, let's go a different angle. Very often when I'm in the Middle East talking to clients, they say, good, I want to invest. I want to send you a bunch of money, Wayne. I'm like, good. And then they're like, all right, so I need to send it through 9 different countries, through 9 different banks, through 9 different wire transfers. And it might not be in my name. Sorry, I can't do that. Oh, but I'll send you $100 million, Wayne. I'm sorry, I can't do that. So I'm not a scumbag. I've heard the other one too. Wayne, I want to send you $100 million, but it has to be done on a line of credit. No, thanks. Look, if you can't send me the money in your name, I'm not interested. So look, I'm not a scumbag, but at the same time, it's not my job to regulate the world as I see fit. I'm in the United States of America. If my commander-in-chief says they want to drop the embargo and allow Persian money to trade freely in the open market, and a friend of mine has wealthy clients that have money locked up for decades that would suddenly like sound investments and put that money to work and grow global GDP, I have a moral duty to make that happen. Igor. No, we're cool, Igor. It's just okay. Yeah. All right. So what are we going to do now? Ozzy Yen Yen? Okay. All right. Let's see. Trending or sideways? So what do you want to do with this? Okay. I see 2 trades here, and none of them are now. Okay, we were down here. Then we made a high, higher than this high. What's the keyword? Hammock. Trade plan is this, which means there's nothing for you to do now. Conversely, if you're a bear, the same thing happened. Lower low, lower high, all right? So you're either short here or you're long here. We're right in the middle right now, which is just a pathetic time to do anything. Slow as molasses on a cold Georgia morning if you're thinking about doing it now. I couldn't possibly tell you if that's bullish or bearish because we're right in between the two. Hang on. I got a rogue EA that kills my MT4 from time to time, and it might have died. Yeah, let me fire this up again. I can't figure out which EA it is. Probably needed to rebuild my charts. All right. So you can see how this one worked. This is an old trade plan that just fired up now, right? Higher high, higher low, higher high. Beautiful. 618 predicts the 1382. Look how perfect that was. Good trade. I don't even remember that one. What are we on? USD CAD? Yeah. Well, let's do yen or something, or what? Well, we got a psych level here. It's interesting. Yeah, this is another kind of trickier one. Like yesterday, this was an easy buy. Seems to me we already did this pair. Somebody asked for it again. Seems like we have already done it. But up, down, up. Very, very easy trade. But now what? And I think I said this. Didn't I already do all this? I'm like, I don't know what to do with this. Right? It might do this. It might do this. It's a low probability trade. You're right. We're not at a good entry either way. Yeah, forget it. The easy trade's done. See, if you were a bear, you would have sold this, right? But it scares me that we already had a down move and then London brought it up and now we're starting down. That little move of this is not a predictable move to me. So I look at that and I'm like, no. And I think that's what my response was a half an hour ago. I still feel the same way. I think the easy money has been squeezed out of that stone, right? Yen, let's do USD yen. All right. Try to figure out what my trade plan was. What was Wayne doing? WWWD. What was Wayne doing? Long? You joking? That's funny, Sugar. Sugar is joking. We have a lower low. So what did I do? Hammock. Sell zone is somewhere between the 382, 618 Fibonacci retracement. Sell right now. Oh my God. Well, I suppose I call that a sloppy seconds, but sure. What you're doing now is you're doing this, I suppose. Hang on, let me change the color of this. Let's go back to red. I think what you're doing is this. Yeah, the hourly doesn't like that. So I'd expect maybe a slightly bigger, but if you're scalping your way, it's definitely worth the shot. Okay. I'd have it like this. But see, the hourly doesn't like that trade plan at all. Well, I guess that's why they invented stop losses, right? Yep. Yeah, 5 minute, I like it. Yeah, I agree with you. Right off the 618 off of a roll reversal. Yeah, it's worth a shot, dude. And 20. All right. Yeah. So it bounced at 0, 0, went to 20, so it's going to go down to 80. Right, Lawrence? Yeah. Cool. Yeah, we talked about that yesterday. So I have 9 guys on my team now that are successful traders and about to turn pro. I've allocated $900,000 to their accounts. I'm looking for maybe 11 more people. Well, maybe not today, Igor. We'll see. If the price action changes, if we head up here, then yeah, then maybe. Or if you're buying blindly at the psych level, then you're jamming your stop and praying. So it's just not the praying trade. I'm just going for the probable trade, right? So, anyways, if you guys are successful traders, you can produce 100 pips a week. I got money. I got another 1.5 million I can put to work. So let me know if you're successful. So, anyways, thank you to FX Street for being fabulous hosts once again. Thank you for your loyalty. I really do appreciate it. It's a really great honor to work with you.